Hey everybody, welcome to another weekly stock market update. I'm your host, Mark Yegge, from the British Virgin Islands today on a yacht, having a great time sailing around the BVI. It's kind of fun, and but able to get some Wi-Fi and get you the market update. It's been a great week. We are in a green market. Let me share my screen and show you what I'm talking about over here. So just got off our mastermind call, which was great. You can see there's 4 green lights, so we're in a green market. Market seems to want to chug high. But I think it's at the end of this little short-term run. We've been bullish in a bull market since January 9th, by the way. And here we are almost at the end of July. So it's been a pretty amazing run. And, you know, like markets don't go straight up and they don't go straight down. They kind of oscillate, right? So we have 4 green lights and things are looking pretty good. The NASDAQ composite, if you look at this chart, it is a beautiful chart weekly of this market just chugging up. And it's been doing it for a long time. It's really quite nice. This is the daily. You can see the daily is just kind of chugging, 1-2% a week kind of thing. And there's no fear in the market right now, which scares me a little bit. Isn't that weird? When there's no fear, that scares me. But nonetheless, you gotta play the market the way it's dealt to you. The S&P 500 is also going up. We had a rough day yesterday. Had a bearish engulfing candle yesterday, but it made up for it today. So maybe it was just an aberration. I don't like the volume because the volume was a little bit high yesterday, but that's the way it goes. Dow Jones has been a beautiful, last 2 or 3 weeks. Just been kind of chugging up nicely, making the jump. And it was leading going into the bull market. Then it took a back seat to the NASDAQ. And now now we're trying to decide who's winning, the Dow or the NASDAQ. The New York Stock Exchange looks almost exactly the same. It's a beautiful chart. We like charts like that. By the way, this is education and entertainment. This is not recommendations, but hopefully you learn a little bit of something every week. A lot of people like the way I read charts, so that's why I do this. And I want to be able to help you read charts and help you make better decisions with your money. The volatility index, the VIX, is now down. If you look at it, it's like right around the levels of the lowest levels that it's been for the whole year. And that means the panic is continuing to come out of the market. And that means more money is coming off the sidelines and going into the market. The Fed raised rates again yesterday, the day before. But what I believe they're going to continue to do is print money quietly while they raise rates, or maybe they stop raising. But that money is going to come into the market and it's going to drive assets higher. I believe that's what's going to happen. We'll see. Let's see, two of our stocks that we like in the cash flow machine is Tesla and Apple. It's not that hard to understand why we like them. Tesla, this is the weekly on it. It has been doing really well, except for the last couple of weeks when it had earnings, which was a big bearish candle, but not so bearish because it's run up really well and now it's consolidating those gains. I expect Tesla to continue higher over the long term. It's got some work to do to make up, to get back to that $400 level from the past, but I think it's going to do it. It's doing some great stuff in their company. Apple, the same thing. Apple just, keeps selling more phones and more subscriptions and doing some really great stuff. So I really like Apple's action as well. And it's been a very predictable stock, which scares me coming into numbers next week. So I always tell everybody, be very protected and be very conservative going into numbers because you can prevent some major losses if you are. So I highly recommend you do that. Crocs, on the other hand, missed numbers. And they had a big gap down below the 50, gap down below the 200 on huge volume. This is not what you want to be exposed to. This is why we protect in our program called the cash flow machine, where we get income out of the market, but we also could protect during those earnings days. So everybody, I know these earnings days are really exciting, but you've got to protect your account. And you've got to make sure that these days that you don't lose money, because if you can protect yourself from losing money on 4 days a year, you might as well take that protection, take that chance. Anyway, that's it for me. I hope you have a fantastic weekend, and I want to thank you again for joining me here on the weekly stock market update. I hope you like what we're doing. If you have suggestions of what we could do better, let me know in the comments, and I'm happy to change things up a bit. But meantime, have a great weekend, and see you next week on the next weekly stock market update. Take care. Bye.